Welcome back, listeners. It's a busy day in the financial world with companies facing legal trouble.
Yeah, lawsuits and stocks making some moves.
Let's jump right in with Chipotle. They're facing a class action lawsuit for allegedly misleading investors about portion sizes and how that's impacted their profitability.
Investors are claiming that Chipotle knew about customer dissatisfaction with inconsistent portions.
And the need to increase them would, of
Mm.
course, impact sales costs.
Right, and this played out in their stock price, too. In July, the stock fell almost 4% after they addressed portion concerns during an earnings call, and then it dipped again in October, another 8%.
After Business Insider published an article about the shrinking profit margins.
Exactly.
And just a reminder, for anyone interested in this case, the deadline to join the suit is January 10th of next year.
Coming up quickly.
Now, Flux Power Holdings is also facing a class action lawsuit.
This one is a bit different, though.
Right, this one stems from needing to restate their financials.
Yeah, improper accounting for inventory is to blame here. They overstated assets and profits and understated losses.
And all this put them out of compliance with their loan agreement. Their stock took a hit over 5% after the restatement announcement, and then another 6% after the late filing notice.
Not good. And the deadline for this one is even sooner, December 31st of this year.
So time is of the essence on that one.
Definitely. And unfortunately, Chipotle and Flux Power are not alone,
Oh no, what else is going on?
as several other companies are in the same boat.
Facing these class action lawsuits for misleading investors.
That's right.
So who else is in trouble?
Well, there's DMC Global. They're accused of overstating the value tied to their Arcadia building products business,
And not having the right systems in place.
leading to inaccurate guidance, which is a problem. Their stock plunged about 18% after they announced weaker than expected sales. The deadline to join that suit is February 4th.
And then there's Hasbro,
They're in hot water over misleading investors about their inventory levels.
saying it was high because demand was strong.
When in fact it was due to excess supply. After they admitted to revenue contraction and workforce layoffs, their stock took an 8% hit. Later, after announcing an 18% drop in revenue and rising costs, the stock fell another 11%.
Oh, that's rough.
And the deadline for that one is January 13th.
All right, so Hasbro, DMC Global. Anyone else?
Evolv Technologies Holdings is also in the mix. They had to restate their financials due to revenue recognition misstatements,
And they even admitted that some sales, including a big partnership, had undisclosed terms.
which led to the CEO's termination.
And I bet the stock took a hit.
Big time. It fell 40% after the restatement announcement and another 8% after the CEO was fired.
Ouch.
That deadline is December 31st.
All right. And then there is Five9. They're facing a class action because they apparently misrepresented their business strength.
And visibility into their customer base. After they cut revenue guidance and revealed issues with sales execution, their stock dropped around 26%.
That one's coming up February 3rd.
And last but certainly not least, Visa. They are accused of not complying with federal antitrust laws.
And not having strong enough internal controls.
That's right. And that deadline is January 21st.
So quite a list of companies facing legal trouble. But let's switch gears a bit to some positive news.
Sounds good.
Global Uranium Corp has announced a flow-through private placement offering to raise $1.5 million Canadian dollars.
That's for exploration expenses on their Canadian projects.
The offering consists of units priced at 75 Canadian cents. They include a flow-through common share and a warrant to purchase more shares. They expect to close this around December 31st. Now, let's highlight some companies that are seeing great long-term stock performance.
Some good news for a change.
Like Watsco, if you had invested $1,000 5 years ago, you'd have $2,843.78 today.
Pretty impressive.
T-Mobile US is another standout. A $1,000 investment from 10 years ago would be worth over $9,240 today.
Wow.
Apollo Global Management also saw fantastic returns. A $100 investment 10 years ago would now be worth $801.95.
Not bad at all.
And finally, MSCI. A $100 investment made 10 years ago would have grown to $1,331.98 today.
Amazing.
Speaking of great news, Checkpoint Therapeutics has announced FDA approval for their new drug, UNLO-XCYT.
This is a big deal. UNLO-XCYT is a PD-L1 blocking antibody, and it was approved for treating advanced cutaneous squamous cell carcinoma. It's actually the first PD-L1 blocking antibody to be approved for this indication.
That's pretty exciting. What makes UNLO-XCYT so special?
Well, it has a unique dual mechanism of action and a really good safety profile. It's a very promising new option for CSCC patients.
And I heard the market for this treatment is huge.
Over $1 billion annually.
And lastly, we have some dividend news.
Yeah.
Village Supermarket just declared a quarterly cash dividend of 25 cents per Class A common share and 16.25 cents per Class B common share.
And that's payable on January 23rd to shareholders of record as of January 2nd.
Well, it's been quite a day in the financial world, lots of ups and downs.
Definitely keeps things interesting.
Those long-term stock performers, let's talk about those for a minute. Watsco, what's the secret sauce there?
Well, Watsco is the #1 distributor of heating, ventilation, air conditioning, and refrigeration equipment and supplies in the U.S. They've really taken advantage of the consistent demand in the HVAC market.
Makes sense. Driven by rising temperatures and new construction.
Exactly. And they haven't just been lucky, they've been making strategic moves, expanding their products and making smart acquisitions.
Really contributing to their growth. Now, T-Mobile US, everyone knows that name. Their stock performance has been amazing.
Yeah, it has. It's interesting how they've managed to take on those big industry giants.
And gain market share in such a competitive industry. How did they do it?
It's been a combination of things, really. Aggressive pricing, network expansion, and a big focus on customer service. And of course, merging with Sprint a few years back gave them a real boost.
A classic disruptor story. They saw that opportunity and went for it. What about Apollo Global Management? They're not your typical company, are they?
No, they're in the world of alternative investments.
What does that mean exactly?
Well, they manage a diverse portfolio of assets, including private equity, credit, and real estate. They've built a reputation for being these savvy investors.
Always looking for those undervalued assets.
Right, and turning a profit.
So their expertise in niche markets gives them a real edge. And MSCI, they're known for their indexes, aren't they?
Yeah, they provide all kinds of tools and services for investors around the globe, and their indexes are used everywhere.
So what's driving their success?
Passive investing is becoming more popular, the financial markets are getting more complex, and there's just this demand for data and analytics.
And they're in a perfect position to capitalize on all of that. It's incredible to see how these companies done so well. It really shows what you can achieve with a long-term investment approach.
Absolutely. But, of course, past performance doesn't guarantee future returns. Investing always has risks.
A good point.
Yeah.
Now back to Checkpoint Therapeutics and their new FDA-approved drug, UNLOXCYT. It's a first for treating advanced cutaneous squamous cell carcinoma.
Yes, it is. UNLOXCYT is a PD-L1 blocking antibody. These types of drugs essentially release the brakes on the immune system so it can fight those cancer cells better.
And what makes UNLOXCYT unique?
It's got this dual mechanism of action. It blocks the interaction that suppresses the immune response, and then it triggers antibody-dependent cell-mediated cytotoxicity.
Wow, what is that?
It basically means it brings in these other immune cells to attack and destroy those tumor cells.
So it's a two-pronged attack.
You could say that. And the clinical trials have shown some really promising results. Tumors are shrinking or even disappearing completely, and the effects last a long time.
That's incredible news for patients, especially because advanced CSCC can be so difficult to treat. Are there any concerns about safety?
Well, every cancer treatment has potential side effects, but UNLOXCYT has been well tolerated by patients, a good safety profile overall.
This is a big breakthrough for Checkpoint Therapeutics and for those battling this type of skin cancer. And the market for it is huge. You said over $1 billion annually just in the U.S.?
That's right. This FDA approval is a major win for them.
You mentioned earlier that diversification is really key for investors. Can you explain why that's so important?
Sure. Diversification is really about spreading out your investments. Don't put all your eggs in one basket, as they say. It helps reduce the overall risk.
So if one investment goes down, the others can help keep things balanced.
Exactly. You might have some in stocks, some in bonds, some in real estate or commodities. And even within stocks, you want to diversify across different sectors.
So you want a mix of investments that works for your risk tolerance and your financial goals.
That's right. And don't forget to rebalance things from time to time. Make sure you're still on track.
Good advice. Thanks for explaining that. Now let's move on to Village Supermarket and their dividend declaration.
Okay. They announced a quarterly cash dividend of 25 cents per Class A common share and 16.25 cents for Class B shares.
And that'll be paid out in January.
January 23rd, to be exact, to shareholders of record as of January 2nd. It's always good to see companies rewarding their shareholders with dividends.
It certainly is. Wow, we've covered a lot of ground today, from lawsuits to market wins and that incredible new cancer treatment.
It's been a busy day on Wall Street.
But before we move on, I wanted to ask you about those lawsuits. It seems like shareholder lawsuits are becoming more and more common.
You're right. They are on the rise.
What's driving this trend, do you think?
I think it's a few things. First, Investors are more aware of their rights, and they're more willing to take legal action if they think they've been wronged.
Makes sense. People want to hold companies accountable.
Exactly. And there's more scrutiny from agencies like the SEC. Corporate transparency and accountability are more important than ever.
The companies are under a microscope.
You could say that. And the legal side of things is evolving too. More law firms are specializing in shareholder litigation. It's easier for investors to pursue these types of cases.
It's interesting to see how all these factors are impacting corporations.
It's a dynamic environment for sure. Companies are under a lot of pressure these days to be transparent and ethical. Any missteps, and they could be in big trouble.
But that increased accountability is good for investors and for the market overall.
I agree. Better corporate governance is a win for everyone.
So much going on in the market. What's your overall outlook?
Well, it's hard to say for sure, but looking at the current economic picture and what investors are feeling, I'd say it's cautiously optimistic.
Cautiously optimistic. Why is that?
We're seeing some good signs in the economic data, like steady job growth, inflation is moderate, and consumer spending is holding up. Those are all good signs.
The economy seems pretty solid.
Which is good news for the stock market.
But are there any concerns?
Of course, there are always challenges. Geopolitical uncertainty, those rising interest rates, and worries about a potential recession, those things are weighing on investors.
So there's a chance of more market volatility.
That's always a possibility. It's all about finding that balance. You have to be careful in the market.
So what should investors keep in mind?
Focus on those long-term goals. Make sure your portfolio is diversified. And don't make any rash decisions based on those short-term market swings.
Investing is a marathon, not a sprint.
Exactly. Patience and discipline are key.
Any last thoughts for our listeners today?
Stay informed, stay engaged, and stay curious. The financial world is always changing. The more you learn, the better you'll be able to handle it.
Great advice. It's been great having you on the show today.
Always a pleasure to be here.
And to all our listeners, thanks for tuning into our Financial News Roundup. We'll be back next week with more market insights and analysis. Until then, have a great week, everyone.